plus $4,431 profits. That's the trading result from our commodity and futures trading according to COT data and our unique and well-known fundamental weather analysis for week number 25. Welcome to Insider Week. In this video, I'm going to show to you the trades of this week and the corresponding results. Let's start with our COT strategy. Here, we derive our buy and sell signals on the weekly chart and derive them from the Commitments of Traders report, combining them with other indicators. We started into the week with an open position in sugar, where we hold 17 short contracts, and as you can see at the end of this week, this position has increased in accounting profits and we are very well in the win. On the weekly chart, you can see our buy and sell signals, and recently we received a sell signal at a level where other sell signals appeared before. These sell signals form a so-called resistance level, and as you can see, the price bounced back from that resistance level to the downside. On this quarterly chart of sugar, you can see where the price of sugar is expected to move to. We assume it to move until it reaches the support level that we've drawn in this chart. The reason for the downwards price pressure is that the harvesting of sugar in Brazil and India is successful in this season. On the daily chart, you can see that we entered this market and where we entered it. In the COT strategy, we teach our students how to enter markets and where to enter them. As we always recommend to plan your trades beforehand, we don't simply exit this trade now because our plan is to hold the position until the level of 17.63 is reached. That's our first target price. And as you can see, by now the position has developed very well. Our second strategy is the so-called champion strategy. Here, we started into the week with an open position in feeder cattle. At the end of this week, we closed all our positions. In this week, we made a total result in the champion strategy of plus $4,431 profits. In total, we had 3 trades in this week. The first trade was the trade in Canadian dollar. We saw a strong downtrend and then there was a correction. We wanted to use that correction to enter the market with our short trade. As you can see, the price didn't develop as expected, and when we've seen that the high from Thursday was overshoot by the price, we knew that the trend continuation wouldn't happen, and thus we exited this market. The next trade was the trade in Japanese yen. It's also a short trade, and firstly, after we entered this market, the price moved into our direction. We saw an upwards bar on Wednesday and then a very strong Thursday. And because of that, we decided to exit this market at the Thursday's close. If the market, however, turns around and we do see our downwards move, we will be interested in re-entering this market. And then there's the trade in feeder cattle. The first long trade in feeder cattle didn't work out very successfully. As you can see, we were stopped out with a loss. We re-entered this market when we've seen that the price tended to continue its price move to the upside. After the week Wednesday, we decided to exit this market. The price went further to the downside after we exited this position, so it was a wise decision. And the final strategy is our weather trading strategy, where we combine COT data with fundamental weather analysis. There hasn't been any changes to the trading report from the last week. We are still in cocoa with 11 long contracts and hold our commodity stocks. As you know from the trading report of last week, 3 of our commodity stocks are based on the idea of the drought period in the United States. And then there are the commodity stocks based on the demand for chlorine tablets. For an extensive discussion of these trades and our trading plan, please watch the trading report from last week. And then there's also cocoa. Our cocoa position is developing fine. We firstly intended to hold this position only for a few days, but we decided to keep that position for now. This decision is based on our intensive analysis, from which we and our students know that cocoa is currently undervalued and the weather is changing. As we haven't seen a deep correction, we expect to see further increasing cocoa prices. At least the probability is very high. Finally, let's have a look at the CRB index as usual. The commodity price index went into the second correction week. On the last Sunday, we announced that this is going to be happening. We expect to see 3 or 4 more correction weeks. And because of that, we reduce our long positions and focus also on short positions. Because as you can see in this week's trading report, our successful trade was a short trade in sugar, which is a good indication that our trading plan works out. Do you conduct short trades as well? Are you also profiting from falling prices? I'm curious to know. So please write it in the comments. And if you're already there, give this video a like and don't forget to subscribe this channel if you haven't done so already. If you have questions to our coaching programs, please visit our website. The link you can find below this video, insider-week.com, to ask all the questions to our coaching program. On the website, you can also find the up-to-date COT data and how to use them for your trading. That's it from our side this week. Thank you for your attention and we wish you a good preparation for the next trading week. And as always, be aware of the risk, because risk management is the key to success in trading. See you all at the next trading report.